I'm Lee Erickson. I want to welcome you to this Startup Week event. The discussion today is going to be around investment landscape for female founders. We have 3 female founders here in various stages of raising capital, so I would like to introduce Birgitt Boschitsch. She is the co-founder and CEO of spotLESS Materials. It is a coding technology that nothing will stick to. So we can just imagine all the applications for that. She holds 5 patents in the US and has 11 pending, okay? Numerous dissertation and distinguished doctoral awards. She was part of Y Combinator, if you know that. That's a pretty prestigious accelerator out in Silicon Valley. And she was listed as Forbes 20 under 30. I almost said 20 under 20, but 20 under 30. In science in 2020. So welcome, Birgitt. We also have Dana Wilson. She is the founder and CEO of CHIP, Changing How Individuals Prosper. It's a B2B financial services marketplace that makes it easy to connect Black and Latinx financial professionals with organizations. She is a Diversity and Inclusion Award winner, named One to Watch in FinTech for Money, also in 2020, if I think that's right. 2020 was actually a good year for some of us, right? 2021 Trailblazer from Black Women in Media, and she is currently in the Executive MBA program here at Penn State. And we have Linsey Covert at the other end. She's the founder and CEO of TEAMology. It's a learning platform for grades K through 8 that helps children build tools for social and emotional learning, so very important. She is a licensed professional counselor for 11 years. She's an adjunct professor at Frederick Community College. She was a finalist in Women in Tech Impact Award and voted foremost under 40 by PA Business Central. So please give a lovely round of applause for these very accomplished people. We're going to go through some questions, and then we're going to open it up to people on the floor to ask questions. So if any of you have questions, please feel to jot them down. But just to set the stage, I'm going to ask some questions of the audience and see. Founders, what do they typically start with to raise? What do they typically use if they need money? What's the number one thing they do? Just say it out. It's not a class. Anyone? What? That's number 2. First it's personal saving, then it's credit cards, right? Then it's friends and family. Friends, family, and fools, very good, right? And then, oftentimes, depending on whether they can bootstrap or not, or how fast they're trying to raise money, angel investing is usually somewhere between $25K and $100K to venture capital. Venture capital can start as early seed for 1 to 3 million. Later stages can be in the 10 millions. Now let's ask a couple questions, okay? An angel investment, what % of angel companies led by women do you think, or companies led by women are funded by angels? Percent. Come on.
10%.
It's 19, so you were close, okay? What % of all companies in the United States get venture capital funding? All companies in the United States get venture capital funding. 3%. You are actually more likely to play in the NBA if you played in college ball than you are to get VC funding. So it's a hard market anyway. Of that 3%, what % is given to female founders? Exactly. Of that 3%, what % is given to Black and brown founders? 1.2%, okay? So it's a very small nugget, and it is not a very equitable field. So that's part of what we're going to talk about. The interesting thing that I think we might hear today is that women-led companies that have received funding are actually more likely to be successful, okay? For all sorts of reasons. So with that, we're going to start asking some questions. So we know that it's more difficult for women to secure funding than their male counterparts. In your experience, how is the experience different from women than men? And why do you believe women may not getting funding at the same level? And we'll start at this end and work down.
Sounds good.
So the first part of that question was, what are the differences in how an experience of women raising funding versus men raising funding? And that's a hard one for me to answer because I'm only a woman, so I can't. But from talking to friends, it seems like at least these days there's a lot of, in my experience, seems like a lot of investors are trying to make an effort to listen to everyone. That's been my experience. But of course, you get a few experiences where that's not the case. But at least in the majority of my experiences, it's been quite positive. But as for why the data shows why there's so many more male-founded companies getting funded compared to female-founded companies, this is just my hypothesis. I think right now it seems like there's a appetite in the VC world for like tech companies, lots of STEM-focused types of, mostly software, but tech. And at least the numbers that I've seen for academic settings is that there are very few women in tech. And so maybe that's my hypothesis for why there might be some differences. And then the logical next question is, well, one, why do VCs have an appetite for tech? Question number one. Question number two is, why are there so few women in STEM? So maybe that's a longer discussion, but that's my hypothesis.
Oh, sure. I was like, how much time do we have?
An hour.
No, I really think the difference is a lot of it is because there's still that traditional look within the venture capital landscape, right? There's not a lot of women. There's not a lot of women of color who are running these companies and running these VC firms. So I would say that is probably the biggest issue there. There's still that, boys club that we're trying to break into, and we're constantly trying to figure out, well, how do we fit into this room with those codes and learning how to have this conversation and maneuver around that. And I think that still becomes a big barrier to entry for a lot of women trying to just break into being in the VC space, and then also trying to be an entrepreneur who is looking for VC. And I think a lot of it is also understanding what type of business you have and what you're running, because not all companies need VC funding. So it's really understanding what works and may not work for you, and going after those who understand and appreciate and want to be champions of women. And there are specific venture capital firms, angels, and those to go after to really see if they kind of fit into what you're trying to build as a business. I just believe that, that's a lot of the reason why you don't see a lot of money going towards women, but I do think that as more women come into this industry as VCs and start to own our own firms, we'll start pouring back into each other, because naturally that's just what we do to support other women.
Wow, those are some great answers. I agree. I could talk about this all night. I've been fundraising for a little while now, and it's a tough question because I'm a woman, right? So I don't want to speak for why men look at women differently, but I can tell you some of my experiences. Maybe I'll go for more concrete examples. So when I started raising money, I had children. And I have had experiences with potential investors kind of pulling me aside and saying, can you really do this? Can you really do this, be a mom and run a company? And I hate to share, that's like dirty laundry, and I hate to share it, but it is a reality. And it's a reality that I hope women in the future don't face. Hiding your belly in meetings, I've been there. So there's some stereotypes, there's some mindset, I think, behind some of it, as well as we know that there's some research, there's some studies that show very similar pitch decks that are given in a man's voice versus a woman's voice are received completely different. Same content, same information. So we could dig into that a little bit deeper, but we would need a lot longer than an hour. I do agree. I think we're kind of going into a time where women are being encouraged and we're supporting one another, and I think that things are going to change. But I have experienced some of the very difficult challenges of being a woman raising money in a man's world.
Okay. So I think I have a note here that 12% of VC decision makers are female, right? So I think you're right, Dana. I mean, it's natural that we understand kind of our tribe better when we're part of it, right? And so we know that can be part of the problem. So let's talk about, you're right, not everybody needs to go out and raise capital, right? I had multiple companies, never raised capital. I don't know anybody would give me capital, but I didn't go asking for it. So tell us a little bit about what precipitated the need for you to raise capital, and then how you went about figuring out who you would approach.
Should I start?
Oh, let's start with Dana, and then do Linsey, and then do Birgitt.
Okay, sure. So when I first built my startup CHIP, so it stands for Changing How Individuals Prosper, and the goal was to connect consumers of all backgrounds to financial professionals of color with a specific focus on Black and Latinx financial professionals. I really went out, I ended up in a low-code, no-code boot camp and built the first MVP myself because I was kind of tired of running around looking for a tech founder.
Tell them what low-code, no-code is, because
Oh, yeah,
those
so
are words
Sure.
we do not understand.
So low-code is just kind of using, or no-code, using different platforms to kind of put together, I would say, the bare bones of what your company is supposed to look like. So what are the 1 to 2 things that you absolutely need to prove your concept? And from there, you can kind of do that through a multitude of different platforms, whether it's connecting something through Calendly or doing anything in some sort of very low-code digital manner where you don't need algorithms and things like that. So I decided to go through and do that process and continue to build up the company. And from there, it was really understanding, hey, we need to take this to the next level, right? We were getting in customers, we were starting to get in some revenue and starting to really be that post-product, post-revenue company. And now we can no longer graduate, well, we have to graduate off of our platform that we have now. So there's a hard way to kind of do that and still build to your next version without some sort of funding, whether it's angel, whether it's VC. At some point that kind of needs to come in. So for me, we're actually at that point now. So I'm actually working on raising funding and going through this process. So it's really real to talk about this now, going through it and talking to different VCs, trying to see what companies make sense, but really making sure that I'm talking to ones who support women of color, who support women building companies, and who also understand a little bit what we're building in the financial services industry, because it's still somewhat new to a lot of people. So I think it's just knowing the different points of your business, where you're trying to go, and what those critical steps are to get to that next space.
Linsey?
Yeah, so congratulations on your journey so far, because it's hard. And yeah, so hard. We don't have enough time to talk about that either. But so I just closed my first round of VC funding as of like 2 weeks, not even 2 weeks ago. And so it's a big milestone. And I had an investor say to me, so you expect fireworks to go off and like dancing monkeys to appear? No, you just start working harder. Like you stop for a minute, you say, that was great, now you just keep going. But the reason that that my company ended up going in that direction was very strategic. We were fortunate enough to get early stage funding from Ben Franklin Technology Partners, which is a statewide funding agency. And that was good enough, at least it got us to our next milestones in terms of the technology that we first launched. And then actually we were kind of dabbling in how do we start to use artificial intelligence and create a platform where kids get services in real time using like an AI plus human technology. Well, that's expensive. And but we kind of did a lot of research and understood what the need was in the market. And then we started to understand what it would take, and was it worth starting the fundraising process? Because I will say, I don't have a technology background. I was an educator starting a company. But I had a lot of vision and interest in understanding how to help kids the best way I could. So for me, it was a challenge at first to understand what it would take in terms of venture funding to get us to the next level. So I had to surround myself with experts, made a lot of mistakes with people that claimed to be experts and were not. But it was a matter of risk. Do I stop doing what I'm doing like right now? And basically for a founder, a lot of that's networking, selling, trying to build a brand. And do I start fundraising? Because it's really hard to do both at the same time. It really takes up your full attention. And we kind of weighed those pros and cons, and we went after it. We were like, it's time. It's time for us to build this platform and get it to market. So that's
how long did it take you from the time you started the fund, figuring it out, to closing the deal?
Depends on if you look at it from the time that I got the lead investor, because that's
From the time you were actively going after the next round. I'm just trying, because people think, oh, it's just going to happen
18 months. I'm looking at a friend. 18 months. Okay. And everybody says, well, the next round will be a lot faster, a lot easier. We'll see. But it's a commitment. I think that's the point. It's, if you watch shows, like I'm going to say Shark Tank, because most of you have probably heard of that or seen that, it makes it look like there's this excitement behind it. And there are milestones where things are really exciting and meetings and people that become really interested in your work. But it's a roller coaster. It's you take one step forward and a million steps back, what it feels like some days. So it is a commitment. You really have to go from being, all right, I'm founder, CEO, selling out in front of people, to investors are just driving me insane.
A little bit like running a business, right?
Yeah.
Right.
Yeah.
How about for you? What precipitated you, and how'd you go about figuring out who to talk to?
Yeah, so we're in very much hard tech. We need a fume hood to do what we need to do to sell anything, and we need lab space, wet lab space. So we had a lot of upfront costs. Fortunately, my co-founder and I both have technical backgrounds, and so we ended up. Our first set of funding was prize money, and then it was SBIR funds from the National Science Foundation. So we had a lot of non-dilutive funds up front to help us, rent space.
Non-diluted? Explain.
Oh yes, non-dilutive means they give you the funds, they don't take any equity. So great deal, lots of rules for how to spend the money, but still really great for anyone doing research-related work. So that was our first set of funds. Then we went through Y Combinator. That was our first set of investment. That was great because it was an accelerator program. And then we had demo day where we pitched to 3,000 investors, and it was great, but also that was when we were pre-product. So we were if this was 3 months later, this would be amazing, but we don't really, have the traction yet to get these, to take on investment. So we raised a small pre-seed round, and the challenge we had was we didn't have a product, and so investors were well, come back to us when you have something. And we're that makes sense. Closed the round. That was we just had it open for maybe 3 months. We're and we just kept hearing the same thing, what's your product? What's your product? We're you know what? Forget this. Close the round. We're gonna get this product out there. So launched our product in November of 2019, and that was really successful, and that was when we started generating traction. We're you know what, let's just be heads down for a while, and then we raised more funding more recently, end of last year. So we closed that round. So the question was, how did you decide it was time for VC funding? And for us, we had the R&D side of things covered with, NSF funding, National Science Funding, SBIR, non-dilutive funds. And then we got to the point where we needed, funds for non-research. So marketing, IP, our intellectual property expenses started really increasing. So it made sense that was the time to raise funds. But really, it was, what is the next milestone? Our next milestone is to get from, we sell consumer products, but we also sell and work with large industrial partners. And so the real goal was let's get our first multi-million-dollar partnership. That's the goal, that's the target. And so raising all the funds to help us do everything we need to do to get to that point. That was the main deciding factor for us.
And so the interesting thing is, right, if you're going to do VC, you have to have a product, and you probably have to have customers and some revenue, or they're not even going to give you the time of day. Angels, depending on how much they're giving you, it could be more the promise of something, and friends, families, and fools is whoever you can talk into giving you money. But there's lots of issues with that.
And even just to quickly piggyback or add to it, I think you also have to be, the one thing that we forget is it's great to get the money, but we also have to be ready to receive it. So it's I'm always thinking with my financial hat on, because you can get thousands or even millions of dollars, but if you're not ready as a team or as a founder to understand what to do with that money or make it last, you're going to have a multitude of other issues within your business as well. So it's also, yes, you want to raise money, but also understanding, okay, now that we have it, what are we doing with it? How are we going to spend it?
Yeah, and that's the financial.
That won't go away. I'm trying to.
Yeah, I know. No, and it's very true. And like that's the theme we're hearing, right? Is you have to understand your business, what you're doing, how it's going to move to the next stage, right? So one of the things that I've heard talking to a lot of women founders and male founders too is sometimes they don't understand the vernacular, the terms that go along with investing, right? Non-equity, equity, non-diluted cap tables, runway, all these words, right? And so how did you guys, and we'll start with Linsey and then work this way, how did you prepare for meetings, and was the process what you expected?
Yeah, again, I had some hard lessons that I learned because I got in front of some investors based on relationships earlier than I was ready for. And so I'm having those meetings and some of these things are coming up, and it was a lot of fake it till I make it through this meeting because I had to just kind of, you're not in a situation, at least speaking for myself, I never felt like I was in a situation early on when I didn't have a relationship with these people that I was trying to convince, they needed to invest in my business. I didn't feel like I could make a mistake or I could let my guard down. So it was always, I learned hard lessons because I'm sure that they knew that I didn't know, but I was trying so hard to cover up what I didn't know. So for me, it was a lot of hard lessons, and then really digging into, okay, what is this stuff? And I'm going to be honest, I hated all of the financial side of everything to do with fundraising. I mean, I would leave meetings, my head just hurt. I was like, this isn't, no, you guys are killing me. So it took me a long time. I had to really, I had to make the decision that, I'm not going to be able to do this until I really start to understand what is being discussed around the table. And so it took a lot of me. I had to learn a lot of lessons and educate myself. So.
Yeah. How did I prepare? I guess there's how I did prepare, or how I did start approaching raising funds, and then how I would do it again, or how I did it the more recent time, and how I would do it, even better the next time, hopefully. Well, one, I think, like you had said, Linsey, that. And I like that we were talking about jargon, because when I first started doing this, my background's in mechanical engineering. I didn't know what a cap table was at first, and that's fine. I think just if anyone is ever worried about that, I started this company because I want to solve a problem, and that's all that matters, and everything else you can figure out. So I learned what all that jargon was, and then I rolled into a VC meeting and was like, oh yes, cap tables, and ran through the list. But yeah, I think that when we started, preparing for raising funds, the first time we did it, we were more responsive. We did our pitch, we got a lot of investors interested, and we worked with a few that we liked and took some funds. But when we did the second time, which I think is the better way, to approach it, is we identified a list of around 100 angels and VCs that we thought were a good fit for our company. And I think fit is really important because they're not just evaluating you, you're evaluating them. You're gonna have to work with this person for a long time. And so we made this spreadsheet of who we thought would be a good fit, and how we evaluated that was, did they have a demonstrated history of investing in companies like ours? Not exactly like ours, because then avoid that. But that had, for us, it was investors that had experience in hard tech, because there's so much software investing going on. We needed something that could actually help us more than just the money. And then, we had our list of questions, which I think are important, because once they, grill you, you can grill them. And some of those questions were okay, what's your typical check size? What's your process? How long is it going to take you to get me an answer? And do you lead? Do you follow? Do you do both? And then do you follow on with next round funding? Those were kind of the main questions that we prepared to ask them. And then it was just the pitch, and happy to dig into that if that's at all helpful. But pitch, and the first few times I definitely practiced a ton with my co-founder and other people with experience. But and then when we got further down the deal flow with some of the investors, then it was very much I'm gonna talk to others in your portfolio, make sure that are you hands off, hands on a type of investor? I like hands off. I don't want them to get in our business too much because they're not spending like all their time working on our business. We are, so their insights are probably not very helpful all the time, not all the time. And then, and I think the last thing I would ask their other portfolio companies is I'd ask how do they behave when things go badly. And that was one that was really important to me because I didn't want anyone kind of, becoming nasty with us if anything went wrong.
Yeah, sure. I mean, there's a lot of jargon, and honestly, you don't want to try to memorize it all because you will go nuts, and then you just don't want to do anything. And even having a financial background does not mean I had a background in the dictionary and understanding what it meant to raise venture capital and all the jargon that came along with that, because it's completely different. I think the most impressive thing when you're talking to VCs or anyone that's going to invest in your business, it's not just all about venture capital, is that you understand your business. You understand the numbers and what's going on within your business, why you're scaling, who your customers are. Pay a lot more attention to that. And not feeling like you have to go read every single book about what it means to raise funding. I think having a general knowledge of things so you walk in the door knowing stuff, because I think also just as women, of people of color, they just assume that, hey, maybe you don't know necessarily a lot of things. There's still a lot of unfortunate stereotypes that go on in a lot of these different spaces, especially being women, and you were talking about having or feeling like you didn't have another chance. And that's a lot of the things that happen. We go into these meetings and we feel like we have that one shot. So it's like if we mess this up, then the whole world's over, and we kind of need to forget about that. So just go in there feeling confident, feeling prepared when it comes to understanding what you're doing within your business and your why. And less kind of getting so hung up on, I need to understand all these different terminologies because they're going to quiz you. Because honestly, half of them, if not more than half of them, don't know that stuff either, if we're being really honest here. But just make sure that you know your business in and out. And then also a lot of what you said about finding the right people to invest, because that makes a really big difference. There's a lot of people in these different spaces who want to invest in your company, but don't necessarily understand your industry, don't understand your why. And you want to make sure that that pairing matching makes sense for you as well. And not all money is good money. So keep that in mind as well.
Correct. You're marrying your financial partner, and it's probably harder to get separated from your financial partner than it is your life partner. Just throw that at you. So
that's probably right.
So I've talked to a lot of women that are doing part of this, and a number of them have commented on feeling like they had to change their demeanor, like they had to be maybe more aggressive or more confident or something. So I'm curious if you guys can share any advice to people in terms of, what the process is like, and how do you play the game and be the thing that everybody thinks you're supposed to be, or do you say, in very polite terms, no, I'm going to be myself and find an investor that wants me. That's a hard choice. So I'm just curious in terms of anything that you can share. And we'll start at this end and go down.
Yeah, that's a really good question, because I think that it's a little bit of both, and I did a little bit of like penduluming personality, or how I approached investors. And I think there were some things that I definitely needed to grow into. I think the confidence and being able to walk into a meeting and know my stuff, and then if I didn't know it, not being really worried about that. I tend to be kind of anxious anyway, so that's something I felt like I was growing into some confidence and maturity running a company. So there's a little bit of just growth, but there definitely was the sense that I have to be kind of tough and forceful, and do I have to do that? And I decided that that's not, I don't want to be a fake person. I want to work on being convincing and but without sacrificing who I am. So that's kind of a half answer, I guess. But yeah, definitely. I think raising funding and also just running a team, there are some things that I just had to learn how to do, like have tough conversations and not be afraid of saying those negative things or critical feedback. And that's just, those were good things. But yeah, not so much I think what I did realize was that if, what investors, at least VCs, what they care about is like, can you make them a bunch of money? And if I can like show them that I have a path to make them money, like I can say that in like a calm, normal voice, or I can say it confidently or whatever. They just, if you can make the money, then then they're happy. So.
Oh yeah, making that always helps. I think that you always, I'm a big proponent of showing up as your full authentic self. I think that there is a balance to, understanding and being humble about how you want to show up in that room, but I think there's also a level of confidence that you just need to bring into the room with you, and that comes with just being who you are. And I think that there's an appreciation about that when you're able to show up, and this is the reason why you built this business and all that you're pouring into it, because that will be reflective of part of your story. And if you can't really tell that story, you can't make anyone else buy into it either. So it's a lot of, yes, I want your money to help me do the next thing in my business, but I also want to make sure that this is going to be a mutual beneficial relationship. And you'll find that some people just want to invest and they don't really care what you do. And some people might want to have a little bit more involvement, whether it's coaching, whether it's connecting you, whether it's partnership. So it's just about finding that balance, finding what works for you, being that authentic person and being who you are, because that's also just a part of your story. And if it works, and always just trust your gut intuition. If it sounds too good to be true, it often always is. And that's the same thing when you're sitting down and thinking about taking money from someone. I actually had someone reach out to me pretty recently on LinkedIn. I had just a quick note about, hey, I love what you're doing. Just want to talk a little bit more about it. I set up a call with this person, and they were just super interested in being involved in any way, shape, worked for them, whether it was them investing, whether it was them sitting on the board, or whatever that was. And I was like, oh, well, yeah, this is great. Was a great conversation. On paper, this person looks like it is a great fit for our business. But I also got off that call and did my snooping. Right? Because I'm like, everything looks great, but I don't really know you. And I kind of went and, did all the background of seeing who we're connected with. Hey, do you know this person? One person said no, and then another person say, hey, I know this person really well, right? So you still have to kind of go through that process regardless of where that person's coming from, how much money they're offering you. You don't want to walk into a room and seem desperate. You want to make sure that you're controlling the situation as much as you can, even if you need that money.
And I would add to that, if anybody that you're looking to get in a partnership, regardless of what it is upset that you're asking questions about them, you just need to go someplace else. If they're so upset that you're checking them out, most business people are very happy. You can't be a jerk, right? But most people are happy that you also care enough about your company and who you partner with that you are also vetting them. So,
oh yeah, absolutely.
yeah.
Because it's not just the money; it's the reputation of you, your business. To some degree, you're separated, but to some degree, you're really not.
Yeah. So I agree with everything that they just said. I'll try and add a little bit more. I think it's an evolution. I think that I think back to the first time, like I said, I sat in front of an investor, and I think I've had to grow into the role that I, as CEO, I wasn't prepared when I first entered the world as a startup CEO. I was passionate about my work. I was solving a problem, and I was willing to do what I needed to do to grow and evolve and get this out into the world to kids, right? So I was committed, and with commitment, sometimes comes what do I need to do to make myself what they need me to be. I will say that early on, I wasn't as confident as I needed to be. This is a whole new world for me, and I remember leaving meetings and just feeling like a failure. I just didn't have enough experience. And I think along the journey, you start to grow some of that confidence. And you start to realize, look, this isn't just about me getting your money. This is about you investing in something that can not only make you money, it's about a lot more than money whenever you start to meet with these VCs. And I would say it's about building relationships, prior to those pitches, offering to take them for coffee, learning about what they've invested in, learning more about what matters most to them, because usually it's, at least in my world, now I have a social impact company, so I'm not meeting maybe with the total sharks of the world sometimes, because that's not a good fit, but typically they have more in them than just, I want a financial return. And so you need to discover that and learn how to use that, I think, in those conversations. But ultimately, I totally agree with you. Authenticity and confidence. I think I landed my lead investor because I pushed back and I didn't agree with what was being said in the meeting. And after I pushed back hard and I kind of established what this was and who I was and what my company represented, he said, "I'll get a term sheet to you by tomorrow." So it was like, I was just like, what did you just say? I think it took a minute for me to process, because I was like, you know what? I was just like, screw this. Like, this isn't just about you. This is my story, and our company is, we have a reason that we're sitting in front of you. So I think, but it for me, didn't happen overnight. It was a lot of self-discovery, understanding who I was, and I'm going to be really honest. I will never share who asked me this, but I did a pitch. This was years ago, before VC pitches, before I entered that world. But I had somebody ask me, "Do you really think you could be the CEO of this company?" And that's then you have to just keep going. You're just like, well, boy, wow, that's a blow. But I'll tell you, within 2 years, that same person came back and apologized to me a couple times. So I feel like I'm trying to give. I feel like I've been through a lot of different difficult experiences, but it's really helped me now be prepared. VCs, it's not everybody's going to need to enter that world, but you need to be ready if you do.
Well, we were saying, this is a marriage, right? So you go on a date, first date, you don't ask somebody to move in. Like, that's a little too soon, right? So you got to get to know them, right? You got to they got to build that trust. So I think that's good for anything that you do. I think that's good for anything that early stage founders do in terms of also finding people to work with, finding co-founders, right? One of the things that I know that I harp on a lot, that I think a lot of young women do, is they use the word just. I'm just doing this, and I just did this, and I only did that. You are undermining yourself every time you say the word just. Or I haven't really thought this all the way through, but I'm pretty sure I think. You're sending those signals. So listen to yourself, right? And that's a form of, you may be confident, but then the language may not be the same confidence. I want to ask if anyone has questions in the audience. I have backup questions if not, but I'm hoping, oh yes, Kitley. I will bring you said mic.
Hi, this is a question for Dana. So Dana, I'm curious about your business model about connecting clients with potential financial providers. Is that a technology application, or is it an application like through the network of your community, or how does that work? It sounds wonderful.
Yeah, sure. Thank you. So what we do is we pair consumers with financial professionals. So if you're a consumer coming to our website, you'll fill out a questionnaire. And based on those responses, we'll pair you on the other end with a financial professional, which could be a certified financial professional, a financial advisor in a traditional manner, insurance professional, or tax, an accountant, or a state attorney. And from there, we kind of get you your best fit. So we understand what your goals are, what you're trying to do, what your income is and things like that. And then on the other side, it's what the financial advisor or the financial professional is specialized in. So how they're specialized to kind of help you get to the next level. And we help you we help you get connected with that person, then set up your first meeting with that person. So we did build in some algorithms behind our technology to help do that. And now we're moving forward to the next phase, which will be a complete build out, which is really exciting.
Anybody else? Questions? Yeah. You can always count on Elizabeth and Kelly.
So I'm just curious, if you could go back 5 to 10 years ago and give yourself advice, like the former you, what would you tell the former you? How like more confidence? Like, what would you tell like the former you?
I don't think I can say that what I first thought out loud. But it was to not give a.
Yeah.
And I think, to put more words on that, I think I spent a lot of time overthinking or trying to be someone that I wasn't when I was younger. You have people around you who either, do all these different things in their career. So for me, I worked for a couple of years. I have always pretty much been in finance, although I have a marketing background. So I kind of feel like I'm always more present in that creative space. But I felt like, okay, well, I worked for a little bit. Now it's time to go do my MBA. And it was like, okay, well, now you got to go through this chain of command because that's either what your older siblings were doing or just because that's what you thought that career path was. And I was in a place where I thought I was doing what I was supposed to be doing, and then kind of took a self-check-in and was like, no, like that's not what you want to do. You want to do something that's not necessarily completely different, but you want to lean into who you are in your own right and build and create your own lane. And I think for me, I just would have told myself that that's okay.
Linsey, Birgitt?
Yeah, so I would say you can do this is probably what comes to mind for me. Because you're going to have a lot of people tell you can't in a variety of ways. And I think the other thing too is get to understand people's intentions, because even the LinkedIn method, like people will reach out over and over again, and naively early on, you just assume everybody really wants to help. Like, yeah, everybody thinks my work's great. Like, this is awesome. And people are, you have to just be careful, because you can do it without pulling in a million people that claim to know more than you do. So I guess that's, for me, what comes to mind right away, amongst probably a whole lot of other stuff.
Yeah, that's definitely a tough question. I think like Dana had said, like I'd probably tell myself to, I don't think like I limited myself a ton, but like I could feel that like, no one, fortunately for me, and this is not everyone's experience, I don't think there were very many people proactively limiting me, but I was limiting myself. And so I'd tell myself, don't do that. And then I think the other thing I would say, or at least like encourage my past self to do, is speak up a little bit more, like give critical feedback, because I care a lot what other people think, and I would not say things that hurt people's feelings. And I still don't, people shouldn't, hurt people's feelings on purpose, but, practicing being able to just say it how it is, something that I want to work on.
Other questions? Yeah.
General question. Could you, or I guess anybody, speak on choosing like co-founders or people to work with?
I can start that one. It was easy for me. My co-founder's right here, texting. So for me, we were spinning out a technology from Penn State, and I did my PhD in Taxing's lab, and so we'd worked together a ton already, and knew each other really well, and had worked through a lot of technical projects together. We'd also done, I was pretty interested in commercializing the technology and learning how to do that, so he'd also been very supportive in getting us into I-Corps programs and kind of letting me have more freedom as a PhD student to try some entrepreneurial things as well. And so it was just very easy. This was someone I'd worked with for such a long time, and had tested all sorts of difficult work situations together. So it felt very comfortable getting that started. I think if I were starting something new in the future, I'd want to work with him. But it would be if it was something very different, like it'd be very hard to work with someone that I didn't know already, or hadn't tested out, like working through difficult things to get like professional, working on difficult engineering problems, like things that make us a little bit angry when we look at them. It's you want to test like everything, make sure that not only that you're both like capable, competent people, but also that you can like communicate through business decisions and technical decisions, and that's why I feel very comfortable with my co-founder.
Yeah, I'll say that I got, I'm really lucky, and I think we all are to some degree, although I don't know anyone, so I'm just speaking for all of you, that you probably have really good friends and network around you, and I think sometimes we overlook a lot of those individuals who are literally right next to us. And I say that because my team, I kind of call them my ad hoc team. None of them are full-time yet, except for me. But the goal is as we raise to start to reel them in. So my COO, I think we initially met when we were in elementary or middle school. And of course you lose touch with people, but of course, because we have Facebook and all these things, we kind of just have kind of kept in touch, right, over social media. And we ended up randomly reconnecting at an event in New York where his wife was speaking at a panel. And I was like, she looks really familiar. And I started to span the room, and there was Doug. I'm sitting down, and I was like, make sure that we connect afterwards. And he was at, I forgot which financial company he was at the time, but we connected, caught up, and I was telling him what I was working on, and he was just super passionate about it. We continued to talk about it. And it was just a really perfect fit based on his background and our synergies. My head of social impact was someone I also knew probably about that long elementary, middle school. We played high school basketball together, lost touch like we all do, and then reconnected, stayed in touch again through like social media. And she was at not Penn State, but she was at Wharton. And we kind of kept in touch through there. She was going through her MBA experience. And yeah, it just made a sense to bring her on with different things that she had worked on. And then someone else I met through a mutual friend as well. So it's not that you're always going back and scrubbing all the people that you grew up with. That's not the case. But you'll be surprised when you start to catch up and you're kind of looking at what people are doing. And, we're all somewhat paying attention to each other on LinkedIn in different spaces. So, be aware of that, who might be in your circle or your sphere of influence that might just work, right? So I'm very blessed to say that I have a lot of very smart people around me who can kind of keep me grounded, keep me focused, and we're not, too close of friends where things might get very muffled, right? There's still a lot of areas to kind of have that space and those boundaries there, but it just works. And then you might just meet someone that you might not know at all, and you're kind of learning and building together on that relationship. But again, do your research, your homework, all whatever you need to do to feel comfortable working with those people.
So I don't have a co-founder, but I was very fortunate that I would say my right-hand woman went to graduate school with me and knew of the work that I went to graduate school back in early 2000s here. And so knew of the kind of like the research I was working on and knew of the work that I was doing. Actually I went out into the field and then started to kind of test out some of the things that I had developed. And then fast forward, when I had an opportunity to pull the IP out of the university, she was right there to be my first employee. So she's been with me ever since. So she's been kind of my stable. I've had some great advisors consistently. Managing and growing a team is hard. At the end of the day, managing people and using your network is really important, and understanding kind of who you're bringing into your company and kind of the brand that you're building and that sort of thing. But we're really excited because we just closed this round, so we're going to be growing our team. But I have a handful of people, 2 full-time people, and then we're going to kind of double that here in the next hopefully 6 months. So.
And I would add to that, don't just say, hi, be my co-founder, right? Marriage, right? Test it out for 3 months or 6 months with that as a carrot at the end. I've seen a lot of, BFFs, known each other forever, and doesn't work out so great. I've seen people that just met each other and it works out great. So it's the same kind of thing. I think what you're hearing from the group is,
take your time.
Take your time. Yeah, be genuine about who you are and what you're trying to achieve. Test it out. You don't have to be a jerk, but you need to make sure there's some synergies there. We only have 2 minutes left, so I want to ask one last question. Is there any one thing you haven't talked about that you want to share in the 2 minutes that we have left. And is there any resource or thing you could say, hey, you know, as you're starting down the road of either starting a company, right, or getting somebody to help you financially, or founders, you know, some bit of advice or resource, right? So words of wisdom and resource.
Sounds good. Oh, that's a tough question. There's so much I want to say. I'll start with the resource question. In Happy Valley, there are a lot of really good resources, and I'd say get plugged into those. Like if you're exploring an idea, get plugged in because they're really good mentors and advisors at Launchbox, at Ben Franklin. I think that this area has lots of good people. And then maybe it's like a word of caution, because when I was getting started, I think Linsey, you were hinting at this as well, that like there are a lot of people, when you're just starting, sometimes, at least in my experience, it felt a little bit like I didn't know what I was doing. And that's when you're kind of vulnerable, and then you have like bad apples coming and wanting to help you. And oftentimes like that's not very, I've gotten very mediocre advice looking back, and fortunately I, you know, realized that before like formalizing the relationship, as they would say. So get plugged in with like good people that are here, like to, you know, they're funded by the state and the university to like not do that and to just really be good people to rely on. So maybe that's my resources wrapped in with a little bit of advice, is find good mentors, and there are a lot here. And avoid people that want to work with you and help you and not be full-time, or not like, you know, not be, you know, still have their hands in many different like projects. So we've gotten a few business advisors that, yeah.
Sure. I would say just understanding what you want as the founder and CEO, like what is your personal brand and your personal story. I think the one thing that I've leaned on a lot is working on turning myself into a bit of a, I guess, thought leader within financial services. So it's about what am I passionate about that also is aligned with my business. So I'm really passionate about inclusion in financial services, and it's something that I speak out about often, in making sure I'm putting myself in a position to be a champion for that, in addition, which is also a champion for my company. So what is the mission and the brand that you want to build as a founder and CEO? Lean into that. Don't be afraid to share your story, because that story, again, will help catapult you in different ways that your business might not. And as far as resources, I'm a big reader, so if you want to find a list of things I can give you to read. But one book that I really like was called Traversing the Traction Gap. It's a really, really good book, and I'm forgetting the author's name, but you can look it up.
Got a blue cover.
Yeah, it does have a blue cover. But yeah, reading a lot of different books, I can definitely help you with that.
Yeah, all great advice. I would say the highs are high and the lows are low. And it's a journey. And, you know, in the beginning, it's really exciting. It's kind of like the beginning of a new relationship. Like, everybody's so excited to hear about your work. And, you know, so you're kind of on cloud nine. You start this company and you're doing all the right things, and you're getting surrounded with good people. And, but you're going to find yourself coming down that roller coaster, and that journey continues to this day. Like, you know, we hear on a Friday that we're funded at our closing our round, and then on Monday our platform is completely bugs and glitches and things that we weren't expecting, and so you're just like, well, I was up there just a couple days ago, but that just continues. And I think, you know, for me, it's safe to say Lee will understand me saying this. You have to learn to get through that. Like when things are really hard, like the stress, the anxiety, there's a lot of research behind that in terms of mental health with entrepreneurs and starting companies. You have to find the right people. You have to find the ways that you can get yourself through that, because no entrepreneur or startup that I know of hasn't experienced those kinds of challenges. So, and they can be really hard. So I would say that would be and then of course all of the resources that were shared, I would echo that.
And one of the things that I've heard consistently, and hopefully you guys have heard, is they care about what they're doing. They didn't do it to become millionaires, right? And those people fail because they can't, the trough of disillusionment, they cannot stand it, right? And so you really have to care about what you're doing. the other thing that I would just add is hopefully, right, no matter where you are in your journey, right, talk to other women that have been there, done that, right? I think I found one of the things that I did not do well as an entrepreneur was go talk to other owners, because I thought, well, if I have to talk to other owners, then I'm not a good leader because I'm just supposed to know this stuff. That's crap. Okay, so that's where I screwed up. So hopefully, find somebody, and you think about people in your families. I think you were talking about that, right? You've got somebody that's run businesses in your family,
Families.
regardless of the gender, right? So they can help you through some of those things. So I would encourage you. So we are basically done, but can we give our panel a lovely hand?